Greetings, everyone. I'm David Darst, here to give you a quick recap of the third quarter of 2024. It was a quarter that featured the economy continuing to slow. It's moderating the rate of growth in the United States. Europe, perhaps even slower than the United States. China, of course, in the news quite a bit, up and down with attempts at stimulating the economy there. Inflation coming down, moderating. There's been some bumpiness late in the quarter, but that seems to be playing into our narrative of a soft landing, where inflation comes down and the economy manages to avoid a recession. The other big development, of course, was the Fed cutting interest rates in September 17th, 18th. And that began the process of monetary policy easing and interest rates coming down. We think this is a time that's beginning to lead to flows going into more risk assets out the curve. I'm talking about credit. I'm talking about private equity. We emphasize in this kind of an environment selectivity, manager selectivity, find managers who can capture value. Now, the Russell Value 1000 outperformed the Russell Growth. The S&P 500 was up 5.06%, but the Magnificent Seven, that's your big tech stocks, were basically flat for the quarter. You had utilities, which are bond-like, up 13%. Financials, which also benefit from a positively sloped yield curve where short-term rates are below intermediate and long-term rates, they were up 8%. In terms of asset allocation, we favor credit over equity right now. A blend of liquid credit, that would be some high yield, some collateralized loan obligations, and levered loans. These are places where you can capture yield. You're giving up in some cases, a bit of liquidity, especially in the private credit area. We want to emphasize manager selectivity who can capture this extra premium that's you're basically able to earn by being a little bit more properly positioned in the capital structure, and also the liquidity considerations are taken into account. You want to basically look at private equity in the secondary market where general partners and limited partners are selling their interests in order to, the limited partners want liquidity, the general partners need to generate income. So they're selling some of their interests, and we think that's another attractive area within private credit. With that, we wish everyone a great continuation of 2024 and look forward to catching up with you very soon.